Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski.
The US dollar surged sharply following fresh comments from Donald Trump, who stated that the US could deliver a major strike on Iran within the next 2-3 weeks. A clear shift from yesterday's tone, when he suggested the conflict might end soon. This signals that a ceasefire is not on the table anytime soon, despite the market briefly pricing it in just a day earlier. In the first half of the day, we'll get Italy's retail sales data and the ECB economic bulletin. These releases are unlikely to significantly shift market sentiment, but they are still worth monitoring. Weak data could add further pressure on the euro. In a bearish scenario, buyers can only rely on support 1.1516. A false breakout there would provide a potential long entry, targeting a recovery toward 1.1557. A breakout and successful retest of this level would confirm bullish momentum, opening the way toward 1.1593, where a strong selling interest is expected. A test of this level would restore the chances of a broader bullish move in EURUSD. The final upside target stands at 1.1628, where you could take profit. If EURUSD continues to decline and no buying activity appears around 1516, downside pressure is likely to increase. In that case, sellers may push the pair toward 1.1484. Only a false breakout there would justify long positions. Alternatively, I would consider buying on a rebound from 1.1448, targeting an intraday correction of 30-35 pips. Sellers have stepped back into the euro right on cue at the levels they were waiting for. In case of a minor upward correction, a false breakout at 1.1557 will be enough to provide a short entry, targeting a move down toward 1.1516 support. A break in consolidation below this level, followed by a retest from below, would open the door for a deeper sell-off, offering another opportunity to enter shorts with a target at 1.1484. The final downside target stands at 1.1448, where you could take profit. If EURUSD moves higher and bears fail to show up around 1557, where the moving averages are currently favoring sellers, the euro could gain momentum for a stronger rally. In that case, it is better to postpone short positions until the next resistance at 1.1593. where selling would only be considered after false breakout. Alternatively, you could plan to open short positions on a rebound from 1.1628, targeting a 30-35 pip pullback.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility of the GBPUSD pair of the last 5 trading days is 99 pips. For the pound-dollar pair, the value is considered as moderate. On Thursday, April 2, we expect movement within the range bounded by 1.3226 and 34.24. The upper channel of the linear regression has turned downward, indicating a change in trend. The CCI technical indicator has entered the oversold area twice and also formed a bullish divergence, which once again warned of the completion of the downward trend. However, geopolitics is currently more important than technical signals. The GBPUSD currency pair has been moving downward for a month and a half, but its long-term prospects have not changed. Donald Trump's policies will continue to exert pressure on the US economy, so we do not expect the US currency to grow in 2026. Thus, long positions with a target of 1.3916 and above remain relevant as long as the price is above the moving average line. It's a sideline on a graphic. If the price is below the moving average line, shorts can be considered with targets of 1.3226 and 31.84 based on geopolitical factors. In recent weeks, almost all news and events have been negative for the British pound, prolonging the downward trend.
That's all for today. See you online soon.